Switzerland, we have now an increased inflationary pressure. If you look at our inflation forecast, it shows that it will come down below 2%, will eventually go above 2% again, especially without any rate hike. So we came to the conclusion that it's the right time now to tighten monetary policy in order to make sure that over the medium term, inflation then returns to the zone of price stability.
What made you decide to go for 50 basis points instead of 25?
Well, we see at the moment that inflation is increased in Switzerland. We have close to 3%. And we also observed that we have a certain risk of second round effects. And we came to the conclusion that it's now better to increase interest rates by 50 basis points and not by 25 points in order to make an initial first step in order to really also signal that we are fighting inflation so that it will also over the medium term be in the range of price stability.
Are you seeing any evidence of those second round effects yet?
Well, in Switzerland, we are still fortunate that the inflation is, at the international comparison, relatively low, below 3%. But nevertheless, we see that the situation also changed. So it's much easier to increase prices. People also accept price increases faster. And we see a certain risk of second round effects also in Switzerland. And for that reason, we also came to the conclusion that it's better now to move interest rates 50 basis points up.
You use the word signal and the importance of sending a signal to markets around your efforts to combat inflation and address inflation risk. What will determine the pace of further interest rate hikes from here, and where do you see the neutral rate?
Well, we make no exact forward guidance, but we clearly signal today that we cannot exclude that further rate hikes are necessary in order to stabilize inflation over the medium term below 2%. So we leave everything open. We will go from quarter to quarter and then decide what is necessary to adjust monetary policy. We do not exactly know what further shocks will come to Switzerland. That could be positive or negative. Inflation could go up further, or we could also have negative shocks. So we will analyze very carefully from quarter to quarter and then decide what is the appropriate adjustment for future monetary policy.
Would you consider even bigger interest rate hikes in coming meetings, should it be necessary?
Well, we do not make any precise forecast on that either. So we will look exactly at the change in the inflation forecast from quarter to quarter. That will be influenced, of course, by international conditions in financial markets, but also international business cycle. And, of course, also the exchange rate will play a big role. And then we will see at the next monetary policy meeting what is necessary, whether policy is still adequate or whether we have to tighten further.
We can't ignore the fact that the Federal Reserve hiked interest rates by 75 basis points last night. The European Central Bank held an emergency meeting yesterday. We've got the Bank of England coming up today with the expectation that they raise interest rates. To what extent, if any, is this central bank action coordinated?
I believe every central bank looks really at its own situation, at the inflationary pressure at home. So this is the case for us, and I believe this is also true for everybody else. So we are looking at our inflation outlook, but of course we are all in the same global economy, and the global economy has a certain impact on inflation. We see the energy prices, we see the bottleneck situation, we see all these kind of situations that have an impact on inflation. And we also have everywhere more or less the same problems of possible second round effects and the wage price spiral. And we have to take that into account in order to make sure that inflation then returns to price stability.
When it comes to the Swiss franc, clearly the strength of the currency has been an issue for the SNB in the past. And I wonder if that means that the SNB will be reticent to get ahead of the European Central Bank, even though for now you have moved before them.
Well, the Swiss franc is an important determinant of Swiss inflation. So in the last quarter, the Swiss franc did not appreciate in nominal terms. Given also the inflation differential that you have it means that in fact in real terms it weakened. So it was even a risk that the inflation was imported from abroad. So that is also the reason why we now came to the conclusion that we do not say that the Swiss franc is anymore highly valued. We will not comment on the Swiss franc on a daily basis, but of course we will take it into account also in the future. And if the Swiss franc becomes too excessive, of course we do not exclude to be active on the foreign exchange market again. But we also told today that we would also consider selling Swiss francs in case the Swiss franc would weaken.